Okay, hello everyone, good day. Yeah, you're welcome back to my channel. In today's video, I'm going to talk about bias, market bias. Okay, if you ask people that are just learning the forex exchange market and you ask them what is that thing that they desire to know most, they tell you it's market bias. Well, it's good to know market bias, but there are some basic things that if you know them, it will enhance your productivity in the market. Okay, so basically I want to look at how to frame your bias on GBPUSD, EURUSD using this correlation with the dollar index. Okay, the chart you're looking at is the dollar index. When you talk about the dollar index, you are talking about the US dollar. Okay, you want to look at this chart because actually this US dollar index informs the direction of the Euro USD and the GBP USD. Of course, all the other currencies that has or the other pairs that has USD in them, US dollar, it influences them too. Okay, but it is most easily seen on the GBP USD and the Euro USD. Okay, so let's dive in. Now, this is the monthly chart, as you can see, of the dollar index. This peak here was in September, and that was the peak of the US inflation. Let me say basically, when you see it going up, that means when you see this chart going up, that means the US dollar is strong. Now, if the US dollar is strong, for example, what do you expect of Euro USD and GBP USD? They are supposed to be coming down. Okay, now when they are coming down, when this dollar index is nosediving, okay, maybe it's coming down, that means that the US dollar is weak. Okay, so what do you expect of Euro USD and GBP USD to be going up? Because the US dollar is weak. Yeah, so this dollar index is very, very important when you are analyzing your chart, especially on GBP USD and Euro USD. You are going to see very soon. But when inflation peaked in September and we begin to see a drop down, I marked out this level as a level where price is possibly going to find a rejection. I marked out that level, and you see this black candle here is January. Okay, January formed like an equal low with this May 2022. So I was still expecting price to drop inside, and price did drop inside. Let me drop to a weekly. The weekly, yeah, on the weekly you can see that last week we have a good drop into that monthly fair value gap, and immediately we have a good response upward. Okay, so that means that last week the US dollar was strong, and you will see it in the chart also that GBP USD, Euro USD, they were selling last week, especially last week Thursday, Friday. You can see the charts by yourself, they were dropping. So this week also, though it doesn't have a large range, this week that we recently concluded, though it doesn't have a large range like that of last week, you can see it went up and it's like going up a little bit. So we have some nice sales too. Okay, so this is basically showing the strength of the dollar. This is what we give you information about. Is the dollar strong? Is the dollar weak? Where can you expect this thing to go to before you see a major rejection and all of those kind of a thing? And let me go back to the monthly chart, for example. On the monthly chart, if you will ask me, where will I anticipate? Let's even assume that, okay, the US dollar will not be as strong as it was in September. Now there are fundamentals to this. It might be, it might not be. There is going to be CPI release on Tuesday. Okay, so it might be strong, but will it be as strong as it was in September? Because September was the month inflation peaked in the United States. Okay, will it be as strong as that? Well, maybe we can say. But if I'm expecting that, okay, this market should reverse and continue to sell, the question is, where will I expect it to reverse from? I will basically expect it to reverse from these points. Okay, this is another fair value gap. For those of you that don't know, it's called fair value gap. I've learned not to see market in the eyes of support and resistance, head and shoulder, all of those kind of a thing, because the truth is those things will fail you more than it will pay you. That's the truth. Okay, I will expect that the market will enter into this just as it entered here below, even if you want to sell. Okay, now if I transpose this to a weekly chart, now some of you might not appreciate what goes on here until I show you majorly. So on a weekly, if I'm expecting this, I'm expecting it at the high of this candle here to take out that candle. So I'm still expecting more bullish momentum. So that means I'm saying that on GBPUSD, on EURUSD, I'm still expecting some more downside. Okay, I'm still expecting some more sell. Now, I said some of you will not appreciate the price action around this side. Okay, let me drop to the daily time frame. This is how to do top down analysis. I've marked my points on the daily or the monthly, and I'm breaking it down. Now look at what happened below this price action here. It's a sell side liquidity. Let me just add some annotation so that it can enhance your view. Okay, yeah, so below this is a sell side liquidity, let's say there. That means that there's money there and the money has been purged. What now happened after? We have a break in market structure or a shift in market structure. That is, market structure here now shifted from being bearish to being bullish. How do we know shifted from being bearish to being bullish? It took out sell side liquidity, then it went out and take out a swing high. Okay, what's a swing high? A candle that has a lower high to the right of it and a lower high to the left of it. That's a swing high. This candle, for example, this candle has a lower high to the right of it, has a lower high to the left of it. That's a swing high. These three candles, 1, 2, 3, the last one is a swing low. Why? It has a higher low to the right of it, has a higher low to the left of it. That's not for the basic of this teaching, please. So let's just move ahead. So when I have this break, where can I expect the market to drop to? I could expect the market to drop here. I could expect the market to drop inside this fair value gap here. Okay, let me change the color so that I won't be having too many of those. This is just one of the models we used to trade. Okay, yeah, so I could expect the market to drop into that place. So, and on the daily time frame, what happened? The market dropped in, and not just that it dropped in, it formed a swing low. For me, that's a whole lot of information on its own. Okay, now can I expect the market to come to the order block before buying? Yes, I can expect the market to come to the order block here. This will be the tip of the order block for me. This is where the order block will begin. Let me change this to black. Okay, but there's a fair value gap and it's prioritized it. So where do I expect the market to reach for? Look at the line I marked on the monthly. Okay, here is the line. And if you look at this place, looks like a relatively equal high. Okay, but let me just return it there. Yes. So what will like give me an assurance now that this market will go up, like this dollar index will go up? Well, I don't have that as an assurance, but what I do have is this. If on Monday's trading, this last candle on Friday, this particular one, if on Monday's trading the market closed above it with a body, I might decide to aim up on Tuesday if conditions are right. But the market closing above this with a body on Monday will signal to me that there wants to be a buy. Now, Monday can be an inside day. What do we mean by an inside day? It will not take out the previous day high or the previous day low. It will just be inside the range of the previous day, because most times Monday might be a consolidation. So if I have something like that, I might be patient, not might, or for someone that is not experienced and all those kind of things, you be patient and wait to see if on Tuesday market rally above this previous day high and close above it. Even if it is just a small peep, close above it. If it does, it confirms to you that this market wants to rally high. Okay, so and if this market starts to rally high, I expect it to take out this high here and take it into this fair value gap before we see a drop. And that's a whole lot of movement. That's a whole lot, because we are on the daily time frame. That's a whole lot. It might take up to, let's say, if we have this kind of candle like this one here, this green one here, if we have this kind of candle, it can take like, let's say 1 2 3, like 3 days to get there. That's a big range. And if we have a smaller candle, it might take like 5 days. So that's a big range. Okay, so but I'm expecting bullish momentum on the US dollar. And what does that mean for GBPUSD and EURUSD? It means that they are going to nosedive. They are going to come down. Okay, so in trading, that's why you see some professional traders, they have like 3 screens, 4 screens, they are watching and all sorts like that. It's because they are doing this basic correlation, although most newbies don't know. It's because they are doing this basic correlation. So watching the dollar index chart alongside your Euro USD and GBP USD when you are trading will help you a whole lot. Okay, if you look, for example, at this place now, come in, let me put a mark there. This is another block. Okay, but I expect it to be a low resistance. I don't expect it to stand. Why am I not expecting it to stand? Because recently I just traded into sell side liquidity. Okay, here I traded inside sell side liquidity here, and I have a shift in market structure, and this candle moved close to it, but it did not really enter into the other block. Then it formed a swing low. I said for me that's important, and I'm still going to do a teaching on why swing low are important. You don't just look for anyhow low. Those are your key lows in the market. Okay, so if I have a push above the other block, yeah, I will confirm that okay, this thing is going high, stuff like that. So let me drop to what happened last week. Let's see what happened last week. Now, this is the chart of the dollar index and the GBP USD. The dollar index is on the left, then the GBP USD is on the right. Let's look at it from Monday. When the dollar index is going bullish, what do we expect of the pound dollar and Euro USD? They should drop down. Okay, so on Monday, the dollar index starts to rally at the breaking of the day. It starts to rally, created a swing low here, created a swing low in this, sorry, yeah, just this portion created a swing low there. This is MT4. It's quite a little bit difficult to operate, but it's fine. Created a swing low, then went up, but look at what's happening in the British pound. It starts to come down. Okay, it starts to come down. So look at Tuesday. What happened in the dollar index is basically the opposite of what will happen in the pound dollar, okay, and the euro USD. Look at it, just the exact opposite. Now look at Thursday, for example, where we have a reversal. Reversal most of the time happens on Wednesdays and Thursdays. Look at Thursday where we have a reversal, just direct opposite of what's happening. So you basically use the dollar index to predict what will happen on the euro USD and the GBP USD. So this will enhance your analysis. It will enhance your analysis. Take for instance, I'm expecting I said I'm expecting bullish dollar, like the dollar will be strong, because on February 14 we're going to have a high impact news that will be released. Now for some of you that don't know, just go to forexfactory.com, forexfactory.com. So you have this information. I've already filtered. On Monday there's no news at all on the USD, so we might not have much volatility like that, and that's the day that many people will make money. The reason why I say many people will make money, especially those trading support and resistance and all those kind of a thing, because the market will consolidate. So if they buy, it will just be buying, and if they sold also, one way or the other, it will favor them. So but the expansion is coming on Tuesday. Now on Valentine Day we have a high impact news on USD, and notice that we will already have a news again on GBP. So what I'm expecting majorly is that on Tuesday, that 8 a.m. news in the morning can manipulate the market, okay, then USD will distribute it for that day. So that's one of the things I'm expecting. So this CPI is used to measure inflation. It's used to measure inflation. So the last time it was like unchanged, but at the same time it still kept the US dollar strong. It kept the US dollar strong. So if this thing, when you click on it on the date released on February 14, if it's showing like it's showing green or it's showing black, that means that the US dollar remains strong. Black means that there's no change happening to it, but we already know the US dollar is still currently strong. So if no change is happening to it, we refer to what we currently have. That means that the dollar is still strong. If it's green, then we're going to have a whole lot of downside on GBP USD. So on Wednesday also we have a news, high impact news on USD, core retail sales. So you must monitor this. We have it on Thursday, then Friday will be a slow day. So what are we saying in essence? On Monday, we're not going to have so much volatility on GBP USD and Euro USD. Tuesday, we're going to have a big range. Wednesday, we're going to have a big range. Thursday, we're also going to have a big range because of this high impact news. Okay? So you brace yourself and prepare for them. If you are trading, maybe you've entered the market before during the London session, please, immediately the London session is off, just go off the market and wait for this news release. And meanwhile, you would have been watching US dollar and be looking at the PD arrays that it will likely respect. So when you watch it that way, you can be able to position yourself very well for the market. Take for instance, if I'm expecting the GBP USD to sell on Monday, for example, I will be waiting for it at this place. I'll be waiting for it here. Some of you wonder why I love the fair value gap so much. That's the model ICT teaches in his 2022 mentorship, and it's quite enlightening, and a lot of people are making money by it. I owe my knowledge to him, and I always respect him because he has inspired me and has a whole lot of impact on my trading journey. So if I'm expecting the pound dollar to sell, for example, I won't want it to ignore this gap. Okay, I want it to come down here. This is where I'll be looking for shorts on Monday. Okay, but we are going to let the market present itself, because before the London session, if the market comes inside this fair value gap before the London session, then I might not take the trade. Okay, I want conditions that are right. So all I need to do is to go to the dollar index. Okay, if I drop to the 1 hour, for example, on the dollar index, okay, it's hanging maybe because of the network. This is the dollar index here. Look at it on the 1 hour. You see that it left its fair value gap also. Let me mark the one here so you can see easily. No, just basically doing the exact opposite. So once you know it, you watch both of them together. So this particular chart that I have here, this app is the MT4, not the MT5, not the MT4. So you can't get this on MT4, but you see it on MT5. Look at it. So if I see a drop down into this DXY fair value gap, if I see a drop down in it and I see a rejection on the 1 minute time frame, okay, I will expect it to do something very close here. Then I'm going to correlate GBPUSD also with EURUSD to frame my entry, okay? Because if EURUSD, for example, has entered its own fair value gap and GBPUSD is forming like an equal high with this, I might decide to also take the sell, okay? But what I want you to take from this lesson is the fact that if you are trading GBPUSD and you are trading EURUSD, you need this dollar index by your side. In fact, put them side by side like this and begin to watch the market. You will see wonders. They basically do the opposite of one another, and GBPUSD is dependent on the dollar index. So you're going to use the dollar index direction, okay, to predict what will happen on the GBPUSD. And I already showed you on the monthly of the dollar index. Okay, it's not fully loaded. How it took out sell side liquidity here, then it entered into the fair value gap, and I'm expecting it to expand higher. So what does that mean? I'm also expecting GBPUSD to drop further. Okay, I'm expecting GBPUSD to drop further. If you put it on the 4-hour time frame, okay, this is what I marked in the days. Okay, if you put it on the daily time frame, no, I don't need this on the daily. Come back on the 1 hour. I want to put this on the daily. Yeah, this is what I want on the daily. So on the daily time frame now, notice I was showing you another block that I was expecting markets to go through on dollar index. So this is the reverse of the other block. It was a bearish order block on the dollar index. It's a bullish order block on the on the pound dollar, the cable GBPUSD. So I'm expecting market to trade below this. So let the market present itself to us on Monday, okay? But this looks like a very good selling opportunity, this fair value gap. When the market gets there, I expect a shift in market structure, or maybe like I expect a total super, like a field swing to enter here. Then we start to look for shorts. So I believe this video is enlightening and it has helped you. If it has, please drop comments and like this video, subscribe also. And if there are things you want me to look into before the market opens on Monday concerning GBP USD and the dollar index and Euro USD, you can put in the comment section. It's what I do like a hobby, so it's quite easy for me to do. Okay, so I believe you have a great week. So next week is gonna be greater. Okay, catching the pips, making the money. I wish you good luck and good trading.